非常感谢洪浩先生的分享。他从经常账户盈余达峰将制约股指的升幅，中国的外汇存款是影子联储，并且正在收紧，以及重点关注2021年泰坦尼克板块三个角度进行了市场展望。接下来我们要进入第二个话题：中英资本市场互联互通。去年沪伦通的启动，实现了上海证券交易所与伦敦证券交易所互联互通机制，是深化中英金融合作、扩大我国资本市场双向开放的一项重要举措，也是一个具有里程碑意义的项目。今天我们非常有幸的请到了作为伦敦证交所中国区首席代表 John Edwards， 他负责伦敦证券交易所在中国的业务发展，大部分时间都在与对伦敦证券交易所市场感兴趣的公司、顾问和监管机构合作。John Edwards 和他在伦敦、香港和北京的团队致力于推动主要市场和另类投资市场的上市、合并与公司合作，以提高他们在伦敦投资界的知名度。在北京任职期间，他是新兴市场的联席主管，负责俄罗斯、独联体和亚太地区的业务发展活动。接下来有请 John Edwards 进行发言。
Max, thank you very much. It's great to be part of Market Outlook 2022. Today, I really want to share the particular perspective of my group, the team that I'm sitting in, which is responsible for developing the LSEG community of listed companies in China. Today, we're seeing the Chinese capital markets continue to open up. On March 25th, the SSE and the Shenzhen Stock Exchange published revised measures on the listing and trading of depository receipts. Now there are more domestically listed Chinese companies which can list global depository receipts abroad. On the back of strong and positive cooperation between China and the UK, we rolled out the first edition of a European Time Zone Connect, launching Shanghai London Stock Connect in June 2019. The LSE was the first to see Chinese companies from the Shanghai Stock Exchange list GDRs, with Huatai Securities in June 2019 becoming the first of 4 currently listed in London. We have already seen the benefits of this framework with heightened visibility for Chinese companies in the UK and access to capital with close to $6 billion raised. And we're just getting started. There are other companies from a range of sectors that are considering overseas issuance of GDRs to fuel their continued expansion into international markets, supporting growth for sales, new sales, and also providing a convenient new instrument to build their footprint through mergers and acquisitions. Before we look forward into 2022, I think it's important to recognize how significant these connect mechanisms really are. They've all been groundbreaking in their own ways and answer a specific need, which is access to new markets. While you can see the current trend of globalization, it is clear that in order to support long-term continued growth, companies everywhere need to factor in their international marketing and development plans. UK companies have been eyeing Chinese markets. Chinese companies are building a foothold in the UK and Europe and buying businesses there. There was Hong Kong Shanghai and Hong Kong Shenzhen Connect. Then there is London Shanghai Connect. And now European Connect 2.0, if you will, with more options available to companies seeking overseas growth. Looking at the London edition of Connect, there was some really strong breakthrough contributions. This is the first capital raising Connect. It was also the first time you had a cross-border depository receipt traded overseas, where investors could cancel the depository receipt and receive cash through the sale of the underlying A share in the local market. This was really momentous. For the first time, Chinese companies had the possibility of having 2 markets and 1 price. There were ADRs listed in the United States before, but those were not linked to local capital markets the same way that Connect GDR is. The Chinese ADRs are standalone instruments. H shares also were not convertible into local shares, leading to significant discounts to the A share. But with the Connect GDRs, discounts following the first day of full convertibility were narrowed considerably, in some cases as low as 1% to 2%. From an investor standpoint, this was a game changer, giving them a new access channel to A shares with the convenience of investing and trading under familiar rules on a well-established platform for depository receipts. If we look at the 4 GDRs who already have come, we can see an emerging picture of what the product will be used for and who it will be used by. Financial services with global reach like Huatai in brokerage and CPIC in insurance. Energy utilities with a clear green growth mission, as evidenced by both SDIC and CYPC, China Yangtze Power, getting the green economy mark. In all 4 cases, we can see already strong brands amplified further on the London Stock Exchange, a leading platform for international listings, with over 38% of our listed companies coming from abroad. They also answered in the affirmative to the tune of $6 billion, whether there will be demand in London for Chinese companies. And this investor demand should only grow faster with the entrance of other Chinese companies with a global growth profile, be it battery chain companies looking to tap into an investor base knowledgeable and hungry for more exposure to the dynamic electric vehicle market, or medical device and drug discovery companies keen to benchmark themselves against companies like Oxford Nanopore and other leading companies in the fast-paced, innovative group of UK-listed pharma companies. So what are the opportunities for Chinese companies in London? Why do they come to list shares in GDRs? Looking forward, I would point to the profile factor as a major driver of future Chinese listings in London, via Connect or through share listings on AIM or the main market. The UK is already a welcoming market for Chinese investment. We can see significant transactions in not just wind power, but also automotive, travel services, video gaming. Our AIM market has long welcomed both Chinese issuers and investors, with many companies welcoming Chinese investors into their share capital. As of 2021, Chinese investors have built up nearly 134 billion pounds of assets in key UK industries ranging from energy companies and transport hubs to breweries and schools. Investments valued at over 1 billion sterling have also been made in listed companies like pharmaceutical giant AstraZeneca, oil and gas firm Shell and BP, and alcohol company Diageo. Other investments include at least 17 independent schools, Lotus Cars, Cineworld and Odeon UCI Cinemas, the Q Hotels Group, and Skyscanner travel website. Having a listing share or GDR in London can give Chinese strategic and portfolio investors a great platform for tapping into this pipeline of potential acquisitions. 1, it gives them another acquisition currency, shares or GDRs. And 2, it gives them the UK profile to embed into the UK business ecosystem. For those Chinese investors buying into already established UK brands, it enables them to leverage off of a loyal following of consumers and investors. Now, data products and analysis will be key drivers behind the success of these connects and the Connect framework in particular. UK investors are after more Chinese data, and investors want to know more about the Chinese listed companies preparing to list GDRs. Companies will naturally be looking to benchmark themselves against the global leaders in their industry. One area where we have seen this in particular is respect to the green economy. The decision of London Connect GDR issuer CYPC and SDIC to be the first Chinese companies to acquire the London Stock Exchange's green economy mark should be highlighted. There are currently over 116 issuers that have the mark, which is awarded to those companies which can show that they derive over 50% of total revenues from products and services that contribute to the global green economy. Global green economy mark companies constituted the 4th largest group for capital raisings in 2021. Global economy mark, green economy mark companies outperformed the FTSE All-Share by 115% over the last 5 years. So this is another profile benefit for Chinese companies dual listing their GDRs in London. It is an opportunity to get recognized for key contributions to a greener future and benchmark themselves against other London listed global leaders committing to a cleaner environment. Regarding data, demand for ESG data is only going to grow, driven by the disclosure requirements in this area. In the last decade, ESG integration has become the norm, with large investors using sustainability metrics deep within the investment process. London Stock Exchange is committed to providing our issuers with support, education, and tools to improve and strengthen their dialogue with investors and wider stakeholders on ESG. As part of that commitment, all London-listed companies now have access to ESG data and scores powered by Refinitiv, one of the industry's most comprehensive ESG databases, covering more than 10,000 companies across 76 countries and including more than 300 different ESG metrics. Companies can use the platform to gain a truly global view of ESG performance in their sector, including data on carbon emissions, environmental issues, and executive remuneration policies. For London-listed companies in Refinitiv's research universe, they can access all of their ESG data in one place and view their individual scores, enabling benchmarking against industry peers. So going back to the theme of connect mechanisms, it all starts with the enabling of frameworks and channels to facilitate capital flow between China and the UK. Using these new channels and instruments, data and benchmarking services, companies should be able to take on more investment opportunities in the UK and overseas markets. So I'd like to thank you very much for the opportunity to speak in today's event, to speak at Market Outlook 2022. I think this is going to be a very exciting year for the London Stock Exchange Group. And I'm very much looking forward to engaging with anyone who has questions about our products, our listing products, or our data products. Thank you very much.